Would you leave a 3.75% interest rate on your home? Well, my client's about to do that. He owes $420,000 on his home in California with about 22 years left to pay it off, but with my strategy, we're paying it off in 4.5 years. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and my team and I specialize in the first lien HELOC. This is the one program and strategy I wish I knew when I first got into the business because it helps you pay off your home in years instead of decades. So when you're making your mortgage payment and you're getting sick and tired of seeing all that interest that you're paying to the bank, this is the channel for you. Make sure to subscribe and follow me because I will show you examples of how you can beat the bank every single day and start building wealth faster. This strategy is going to help this client save about $121,000 in interest on his mortgage. Let me show you how this breaks down. So here's his current loan at $420,000. We're going to pay that off and refinance him into our mortgage. He's going to leave his 3.75% interest rate. His take-home pay every month is $21,000, and he's got about $50,000 in his checking account. So the whole premise behind the first lien HELOC is taking your cash and using the HELOC like your checking account. Whenever you get paid, money goes into the account. It pays your loan balance down dollar for dollar, whether it's $1,000 or $100,000. As your loan balance reduces, so does the interest. Any excess cash that you have lives on the line of credit, still giving you access to the money. So over time, this builds up more equity and capital for yourself to make other investments or just have extra cash laying around. The best thing about this line of credit is that you have access to it for 30 years. So at the end of the month, after his $21,000 hits his account, he's got about $5,600 left over after he pays all his bills and expenses. If he stays in his current mortgage, it would take 22 years to pay it off, paying back a total of $617,000 between principal and interest. With our refinance, we're going to pay off that same $420,000 balance, pay his home off in 55 months or 4.5 years, saving him a total of $121,000 in interest. The average interest rate on this HELOC is 8.3%, but because interest gets calculated daily, we're only paying $75,000 worth of interest, which gives you an effective rate on this mortgage of 1.1%. That's the real cost of what you're paying to pay back the mortgage. And if you still think that 3% interest rate is better than my 8% HELOC, we're going to be debt-free in 55 months. You would still owe the bank $358,000 in that mortgage. Our loan's completely paid off. We're buying real estate. We're buying businesses with our cash flow at that point. And now you would have only paid down $61,000 on that mortgage. You can brag about that 3.75% interest rate all you want, but our effective rate is 1%. You can't beat that. Like I say in all my videos, interest rates don't mean anything. It's the strategy of what you're using to pay off your home. If you want to be like this client, pay your home off in a few years, send me a DM and I'll teach you how to do it.